Hello students, today we will solve the 10th problem in fund flow statement. 2015 question paper. Following are the balance sheet of Creative Company Limited as on 31/3/14 and 31/3/15. We have share capital. There was an increase of share capital of 2 lakhs compared to last year. So 2 lakh increase in share capital is called as issue of share, will come in FFS. There is an increase in general reserve to the extent of 1 lakh. It is treated as GR transfer. Last year PL account 2 lakh, current year PL account 3 lakh. Then we have provision for depreciation, students, that is related to fixed asset, because depreciation is generally applicable to fixed assets. It's called land and building or whatever it is. It can be treated as land and building, or it can be treated as plant and machinery, whatever the cases. So provision for depreciation, you need to prepare the account. Provision for tax, you need to prepare an account because we have adjustment number 2. 10% debenture, ignore because there is no increase, there is no decrease, no much changes. Creditor will come in statement of changes in working capital. Fixed assets, you need to prepare an account because we have an adjustment number 4. Investment, you need to prepare an account because we have adjustment number 3. Stock, debtor and cash will come in statement of changes in working capital. Preliminary expenses, last year 20,000, current year 10,000. There is a decrease in preliminary expenses. It will be treated as written off, will come in adjusted PL account. Next, additional information, 8,000. 80,000 is a dividend paid, will come in 2 places, adjusted PL account and FFS. Income tax paid 1 lakh will come in 2 places. It will come in FFS. It will come in provision for tax account and FFS. Profit on sale of investment 20,000 will come in 2 places. It will come in investment account and adjusted PL account. A machinery which was included in fixed asset. So fixed asset includes machinery. Cost rupees 1 lakh. On which accumulated depreciation is 80,000, was sold for 40,000. Students, cost of the machine is 1 lakh, but its accumulated depreciation, add-on depreciation is 80,000. Then WDV you get 20,000. 1 lakh minus depreciation 80,000. You get WDV, written down value 20,000. Now 20,000 machine is sold for 40,000. It is sold at higher value. Then extra additional 20,000 will be treated as profit on sale of machinery. So students, prepare fund flow statement. So current assets, students, this is a statement of changes in working capital. So stock decrease of 1 lakh will result in decrease in working capital. Debtor increase of 1,60,000 will result in increase in working capital. Cash, there is an increase of 1,40,000 will result in increase in working capital. Total current asset 5,90,000, 7,90,000. Then creditors, there is a increase in creditor of 30,000. Increase in creditor will result in decrease in working capital. Then total current liabilities of last year 30,000, current year 60,000. So current asset minus current liability, you get working capital. So last year working capital 5,60,000, current year working capital 7,30,000. So compared to last year, current year, there is an increase in working capital of 1,70,000. So 1,70,000 is a total increase in working capital in the current year. Now it's called land and building account, students. It can also be called as fixed assets. Okay, so to balance, bring down the fixed asset 10 lakh. There is a profit on sale of machinery which I discussed in adjustment 20,000. So profit will come in debit side. Next, sale of machinery 40,000. Then accumulated depreciation 80,000 given in adjustment. Then balance carried on, you get 4 lakh, 14 lakh. So total credit side is more 15 lakh 20,000 minus the debit side. You get purchase of fixed asset 5 lakh. I repeat, purchase of fixed asset is 5 lakh. Next, provision for depreciation on land and building account, students, as we done in the previous case. So land and building depreciation you need to prepare, because in the liability side they are given accumulated depreciation. It's given in liability side, so it's called by balance brought down 3 lakh, and take down this 80,000 depreciation from fixed asset account credit side. It's here in the credit side, 80,000 transfer to debit side from credit to debit. So that is called fixed asset depreciation 80,000. Then closing balance 4 lakh. So you get a balancing figure of 1 lakh 80,000 is a current year depreciation. Investment account, students, it's an asset. To balance brought down 4 lakh. There is a profit on sale of investment 20,000 given in adjustment. So 4 lakh 20,000 minus closing balance, you get sale of investment 60,000. Then we have provision for tax account, it's a liability. So by balance brought down 80,000. In adjustment they are given to income tax paid. When you pay, it's an expense 1 lakh. Then closing balance 1 lakh. Total of debit side 2 lakh minus 80,000, you get 1 lakh 20,000 as a provision made in the year. So 1 lakh income tax paid is for the current year. 1 lakh 20,000 is the income tax provided for the future. Adjusted PL account, students, GR transfer as explained in the balance sheet 1 lakh. Depreciation 1 lakh 80,000 which we found in provision for depreciation account. The new provision for tax 1 lakh 20,000. Prelim expenses written off 10,000 given in the balance sheet. Dividend paid 80,000 given in adjustment. Then current year profit, credit side, last year profit. Then we have profit on sale of fixed asset 20,000 which we got in fixed asset account. Profit on sale of investment 20,000. Then we get funds from operation 5 lakh 50,000. Fund flow statement, students. Issue of shares 2 lakhs as discussed in the balance sheet. Sale of fixed asset 40,000. Sale of investment 60,000. No decrease in working capital, no dividend received, no loans raised. But we got funds from operation 5 lakh 50,000. Then redemption of share, we don't have any redemption of preference share. Increase in working capital 1 lakh 70,000. Then given in adjustment, dividend paid 80,000. Loans, nothing repaid as such. Income tax paid, purchase of fixed asset 5 lakh. So all payments will come in applications and all receipts will come in sources. So students, work it out. Thank you.